Hello, everyone, and welcome into Senior Living Live. My name is Melissa. I hope you're having a fantastic day today. And as always, thank you so much for joining us. My friend Ben Green is here with me this afternoon to help all of you not only prepare for retirement, but if you're already there, he wants to keep you there as worry free as possible. Ben, how are you today?
Melissa, I'm doing fantastic, and thank you for having me on.
Of course, as always, your information is on point and fantastic. And I know it will be with this topic here today. So before we get into retirement, tell us a little bit about you.
Sure. So Ben Green here in Columbia, South Carolina, with Insurance Advantage. We're happy to serve folks really all over the country, especially on the East Coast. And I have a BA in finance from Morehouse, MBA from the University of South Carolina, and worked several years for Department of Commerce in South Carolina, representing the state and bringing in new business. And really happy to do that. Proud to do that. But I am happier now to be able to represent our clients and then help folks really across the state and across the country with their health insurance needs. And I was fortunate enough to live overseas for several years in Japan and Spain and Brazil, and great that I can speak some other foreign languages. But the language I speak the most these days is insurance, which is maybe as difficult as learning as Chinese actually. So happy to be able to break things down in English for folks, whether or not it's the Affordable Care Act plans, Medicare, long-term care, annuities, or anything else.
Yeah, I think there are 80,000 characters in Chinese. So if you're going to pick the most difficult language, that one would probably be it. So very good comparison because it is so true. You really got to get into the information here and read all the fine print, and that is what you are there to help your clients do. So as it relates to retirement, we all can't wait to get there, right? If someone is between the ages of say 55 and 62, that desire to retire gets real tempting. What should people start doing within that time frame to prepare?
Yep, and I actually started about 5 years ago, really digging into this because I found that my parents, my cousins, my aunts and uncles, my grandparents even were not fully prepped for retirement and beyond. And so we partnered with the Financial Education Partnership, which is a 501(c)(3) that really works with financial literacy and provides that consultation for free to help folks across the country to dig into these issues. And when it comes to retirement planning, first thing is congratulations if you're on this video, looking at this and you're thinking about planning, because that is the first step. The second step is looking at four big concerns or issues for retirement. The first one is income. What is your income going to be? And then what are your bills going to be? And then taking a look at your retirement budget, if you will. The second thing is, and it gets overlooked, is taxes. So even if you have a large 401k, that's a tax qualified plan, if you will. And when you start taking distributions, whether it's at age 59 and a half or at age 72, when you're required to start taking some distributions, that money may be taxable. Very likely it is going to be taxable. And so you need to do some planning around that. You may also have grown your portfolio wildly, but you do have to take a look at the fees that are associated with your investments, your mutual funds, et cetera, to make sure that that's not eating away at your wealth and also at your income potential. And then the last thing, and it's a great problem to have, but it's also a challenge that a lot of folks are starting to deal with now, is longevity. We're living much longer these days, and so it's really important that you kind of game plan for that, and you make sure you have enough money to last the entire ride, and make sure you can enjoy that entire ride.
Yeah, and it may be a good idea to kind of, if you are prepared for a 1K, pension, Social Security, that you sort of take these in timely chunks. And that's going to lead me to Social Security, right?
Yes.
People look at that and they choose 62 to retire because, oh, I can now start drawing on my Social Security that I've worked so hard for all these years. But should they at that age? And if not, what is the optimal age for Social Security?
That's great question, Melissa. So the statistics are actually surprising. It's great, but it's also a challenge. So first of all, women are going to outlive men typically by 5 to 10 years. Because us men, we sometimes we're not necessarily taking care of ourselves, or we may do some more dangerous things sometimes. So that's something to consider. The average 65-year-old male, once they hit 65, they're going to live on average to age 84. The average female is going to live to age 87, and there's a chance that one spouse, there's a 25% chance that you'll live to age 97 for one spouse if you hit age 65. So that's a long time to game plan. And then the other kind of retirement challenge is that the average American dies with about $62,000 in debt. So based on your bills that you have, your current obligations, your mortgage, your car payments, and so forth, that's you really kind of have to game plan for those things. And so as we're taking a look at Social Security and kind of the overall bucket, as you mentioned, Social Security, pension, your 401ks, maybe even some life insurance, we want to take a look at, we want to do a sort of first of all, asset and debt inventory. We want to create a budget. We want to take a look at your overall revenue plan, kind of the buckets that you're going to be pulling from for your, for this ride. And then we want to also figure out how you want to retire. And so what income do you need? Where are you going to be living? Are you going to be living in Chicago? Are you going to move down to sunny Florida, which a lot of people are doing? Are you going to move in? Are you going to live in California? Are you going to move to Texas, where there's no, state income tax, for example? Or are you going to move to Costa Rica, which some folks do? So, what sort of income do you need for that? You also need to think about your kind of the estate planning, leaving a legacy. So things like your wills, like your power of attorney, copies of life insurance policies, not only you have, but also your beneficiaries have. And then as we'll get into, you need to think about, how much it is going to cost for health insurance, your Medicare and so forth, your life insurance, long-term care costs. And then you need to take a look at, your overall investment portfolio. And when it comes to Social Security, that is actually part of your portfolio, if you will. That's part of your portfolio for investments. And so it's really important to take a look at that, and I'd like to share one little slide with you on that. So at age 62, you can start actually taking Social Security. And the pro of that is being able to receive benefits earlier. The con, of course, is that you're going to get less money. It's going to be a smaller check. So that may not be an optimal time, particularly if you were healthy and you have a healthy family history. Full retirement age typically is age 66 and a half, and that's where you're going to get a higher monthly check. From age 62 to up to age 66, every year that you can wait, you're gaining about 8% a year, really guaranteed on your check. And so that's a nice investment return, if you will, to wait for Social Security. And then full retirement age, if you can wait that long, to age 70, as part of your overall portfolio, if you will, for retirement, is going to give you a high monthly check. So for example, you may have started out at $1,800 at age 62, but if you can wait till age 70, that 8% a year, that may get you to about $3,000 on your Social Security check. And so that can have a really, really high impact, really big impact on your Social Security and your overall retirement plan.
Absolutely. Big difference. Now, we did talk about, we mentioned the word legacy. So when we talk about that, and if we have a spouse, we want to make sure that they're taken care of, or even our children are taken care of. Usually in most families, you have one spouse that handles the finances, that handles the life insurance, that handles all things financial.
Mm-hmm.
So can you tell people watching why it is imperative that both spouses and even some family members know exactly what they can count on in the future?
Yeah, so it's really important for spouses to understand what the mortgage situation is, how much longer you have to pay it off, to understand, what all the bills are and what the obligations are, to understand how much life insurance your spouse has, so that if you're dependent on that income, if you're not, a millionaire, or you have $10 million in the bank, and you are dependent on that income to pay the bills, to pay the mortgage, etc., you are taken care of, or your spouse is taken care of in the event that you're not going to be there. And then it's also really important to understand, because, as I said, women a lot of times are going to live longer than men, and they may be riding, they may be counting on their spouse's income to kind of help with retirement. And if that spouse passes away, your entire retirement plan can get blown up. So it's really, really important. And just had a pretty sad story with a 47-year-old fella who passed away in our community this past weekend, with 3 children and a wife, and they were not prepared. And he did not have any life insurance. They did not have a lot of savings. He was the primary breadwinner, and that, they're doing a GoFundMe right now, but that obviously is not a good strategy, good plan for your family. And so it's really, if I don't say anything else, it's really important for both spouses to know what's going on and to have a game plan should something unexpected happen.
Yeah, and I'm really sorry to hear that. It's sad, and it's one of those things that we don't know when it is our time, and it's always best to be prepared so
Yes.
that those who are left behind are taken care of.
Yes.
Great example. Thank you so much for that. Now, you had mentioned state income tax, and maybe people want to move to a place that's a little cheaper or doesn't have a state income tax. What are some options you can give people to sort of expand that portfolio safely?
Yep. So the number one option we just gave, which is almost guaranteed. It is guaranteed as long as the U.S. government can continue to pay it, is Social Security. A lot of folks don't think of that as part of your retirement portfolio, but it is a really important part of that kind of 3-legged stool, if you will, or 2-legged stool of your income. And so option number one is Social Security strategy, and extending it for as long as makes sense for you and your family. Option number two, obviously, is to make sure you're maximizing your Roth IRAs, which are kind of tax-free upon withdrawal. Once you qualify for that, or maximizing your 401ks and making sure that you minimize the fees that are involved with those 401ks and other investments through your job, your 457s and 403bs and TSPs and so forth, for folks that have federal retirement accounts. Another option that we take a look at is annuities. Now, there are a lot of different types of annuities, and you have to be really careful. You have to be really aware of which ones you're getting into. Variable annuities typically have higher fees, for example, but there are annuities called indexed annuities, which are with life insurance companies, that can be interesting ones to take a look at to increase the overall portfolio, and also provide a bit more of a guarantee in terms of your principal, and also a little bit more kind of stable income, if you will, in your golden years. And then there are also annuities called MIGAs, or multi-year guarantee annuities, which are essentially like CDs from life insurance companies they provide lower rates, but they're consistent in terms of their returns. So that's another opportunity for some growth. And then the last opportunity that a lot of folks do not look at, but is becoming more popular now, especially as they try to tie in long-term care insurance with it, is permanent life insurance, otherwise known as whole life insurance, for example. And there are also some variable and universal type of life insurances that are in place. But we at our firm, we prefer to take a look typically at the whole life insurance, also known as cash value life insurance, that can provide some tax exempt type of opportunities in retirement. And it can also provide long-term care benefits as well, and chronic care benefits as well. So those are a couple of options to expand that portfolio.
Yeah, fantastic. And if you are of age at 65, Medicare can add some extra, or keep some dough in your pocket, so to speak,
Yes.
in terms of health insurance. And you've got a fantastic video that we do have up online at seniorlivinglive.com. But tell us a little bit about how that can save you money when you are of age.
Yeah, so the typical, typical person, let's say you're 63 years old, you're working for a law firm or, working for a hotel or working in a restaurant. The price of your health insurance through your job may be $1,000 a month, okay? And you may pay half of that, so that's $500 per month that you're having to pay on your health insurance. And those deductibles may be low, but sometimes those deductibles may be pretty high. You may have a $6,000 deductible per year to meet. There are a lot of Medicare plans that can really drastically reduce those deductibles, and you can there are plans with premiums that start in the $50 per month range, even up to $120 per month range, along with your Part B plan, which is this year going to be about $148, where you can get much better coverage actually at a lower rate, at a rate that's 30-40% lower than what you were paying at your job, and certainly what your employer was paying at the job. And so it can be a kind of a win-win for all involved if you're eligible for Medicare.
Yeah, love that. And if you just say, you know what, I don't even want to watch that video or any more that Ben has because I just want to call him up and utilize his services. How can they do that, Ben? How can they get in touch with you in your office?
Sure. So they can give me a call at 803-509-3394, or they can email me at ben@theiateam.com. And I'll just put my email up here on the screen. And want to thank you for bringing me on. Really always excited to come on and talk about this stuff. We do all this for free. I love, obviously, I think you can tell I'm a bit of a nerd with this stuff. I love doing it and love helping folks out. And so they can feel free to contact me at any time. We love to help folks out.
Yeah, and that is okay. It just means that you know your stuff and you know exactly when you're excited about something, you want to continue to learn more about something. So I'm telling you, people, this is the man that, anytime a law changes or rules change when it comes to this kind of information, Ben is your guy. He can help you navigate it. Ben Green, thank you so much for joining us again today.
Melissa, thank you so much.
We appreciate you. Great tips to help with retirement. Ben has several tips about Social Security benefits, long-term care insurance, bridging the gap between Medicare and Social Security benefits. It is all on www.seniorlivinglive.com. Take a look there, or you can contact Ben directly. As always, we appreciate you watching Senior Living Live. Have a great day, everybody.